Welcome to the housing report for Southeast Michigan, September 2023. There's a couple things I want to go over right off the bat. There's not a ton of change. We're still seeing very low inventory and very high demand. So there's a lot of buyers and not a lot of sellers. But there's a slight uptick in new pending sales. There's a slight uptick in new listings, but it's so minimal it's not able to overbalance the demand and the lack of listings. So it's still not catching. The listings are still not catching up to all the buyers. Values have dipped very slightly. We're talking 1%, maybe across all markets. I think that we're going to get to that. But a few takeaways from the metrics we're about to look at. Sellers, it's still a great market. If you have a move-in ready house, it's going to sell quickly and most likely over asking. And buyers, there's still so many buyers out there, but if you're willing to look in some of the lower price ranges and you're willing to do a little bit of work, you're going to find deals. And a good sign is that investors are still buying houses. Investors are taking on debt, they're being creative with financing, and they're still buying houses. If investors are still buying houses, knowing that they're going to get a return, whether it's monthly rent or if they're going to be able to flip it, that's a good sign for you as buyers that the market's not really going to take any major turns. And that's what I believe. I don't think anything is going to change so drastically anytime soon that we're going to be in any weird situation or uncomfortable situation. 5-county summary in Southeast Michigan, overall down 1%, but if you see, most of that comes from the lower price ranges. In Oakland County, we're going to see a higher average price point. In Macomb County, we're going to see a lower average price point, but for Southeast Michigan, you don't get a lot of home for $250,000 or less. There are very nice homes. There are very move-in ready homes that sell quickly. However, for the most part, homes under $250,000 are not up to par for what buyers are expecting nowadays. And that's because buyers pay higher interest rates. They're going to pay more for a house. So they want to find the right house. And that usually means going up in price. So yes, we are down 5% in that price range. But when you see that we're up about 1% in the upper price ranges, that's where the majority of sales are happening. We're in a spot now where most of the buyers are first-time home buyers. They're already paying a ton, so they're usually looking for something that's move-in ready for them, or it's for people who have to move, families who are trying to get a bigger house, retirees who are trying to downsize. And that's where we see most of the uptick in these price ranges. We're also seeing those drive up from new construction. New construction is so expensive, it's actually pushing prices up too. If we look specifically at Oakland County, we're seeing a 3% increase. So the two markets that I work in primarily, they're up, and not a whole lot, but about what we expected. And again, only down slightly in the lower price ranges. For $300,000 in Oakland County, it doesn't get you a lot. These are usually first-time buyers finding deals, and they're getting instant equity as soon as they move in and do some updates. And we're seeing those price increases in the upper ranges for the move-up buyers, the downsizers, the people who have to move. And then we scroll all the way down here to Macomb. We're going to see the same thing we do in Oakland County. The market's actually up slightly, and down a lot less actually in those lower price ranges. For less than $200,000 in Macomb, you're not getting a very big house, a very move-in ready house, so that's what's driving those prices down. People are a little overzealous when they sell. They think their house is nicer than it is, or everyone thinks they're sitting on a pot of gold. And they overlist their home. It sits on the market. The longer the house is on the market, usually the bigger the discount you can get. Right? And that's what we're seeing. So any buyers who are out there who are looking for those houses in the lower price ranges, they don't need all the space that a family does. They're finding deals. I have a buyer right now who bought a house in Oak Park off market for about $30,000 less than the market value. So first time buyers, if you're willing to look for those houses, where you have to do a little bit of work, you're going to get your money back. And for anyone else who's moving because they need a bigger house, they need more space, they're moving because of work, there's not a huge over expenditure here. We're only seeing 1% to 2% increases in some of those bigger price points. So overall, more of the same that we had from the beginning of the year through the summer. I think cyclically and just seasonally, everything's kind of getting pushed back. We're going to see more of the summer rush fade into the fall, and prices will eventually come down and maybe level out by the end of the year. Year-over-year growth, I believe, is still going to be, slightly up 1 or 2%. So there's the September report. If you disagree with anything I say or you have some other comments to make, I'd love to have a discussion. Just reach out.